All right, let's dive into a really fascinating day on Wall Street. It really felt like a high-stakes tug of war. On one end of the rope, you had some seriously powerful good news. And on the other, some pretty troubling warning signs.
So let's break down the stock market conditions for Monday, September 15th. This was a day that just felt full of contradictions, record highs clashing with some real tension under the surface. We're going to figure out what was really driving the action.
And here's the final score for the day. Despite all that pulling back and forth, two of the biggest indexes, the S&P 500 and the NASDAQ, both closed at new all-time highs. So the big question is, how did that happen?
To figure that out, here's our game plan. We'll look at the forces that were fueling this rally, then we'll look at the headwinds that were trying to pull it back down. We'll spotlight the day's biggest moving stocks, and finally, we'll try to make sense of it all. So let's start with the good news.
Okay, first up, let's look at the side that actually won the day's tug of war, that powerful upward push that sent the market soaring to new records.
There were really four key things pulling the market up. First, a potential US-China deal on TikTok had everyone breathing a sigh of relief about trade wars. Second, big tech was on an absolute tear, with giants like Alphabet and Tesla leading the charge. Third, and this is a big one, investors were getting really optimistic that the Federal Reserve was about to cut interest rates, which is like music to Wall Street's ears. And finally, that AI boom isn't just hype. It's creating so much demand that companies like Western Digital are actually jacking up their prices. And that positive vibe on trade wasn't just a rumor, it was getting echoed from the very top. When President Trump said negotiations were going very smoothly, well, that's exactly the kind of official reassurance that calms nerves and gets investors excited to buy.
But, like I said, it was not all sunshine and rainbows. So now, let's grab the other end of the rope and look at the very real headwinds that were trying to drag the market down.
So even as the big picture on trade looked good, a new tech fight was brewing, with China launching a probe into the chipmaker NVIDIA. On the economic front, a really important manufacturing report came in shockingly weak, and, interestingly, while the big institutions were buying, individual investors, everyday people, were actually pretty pessimistic, with almost half of them expecting the market to fall. On top of all that, we're in what's called a buyback blackout, which is just a quiet period where companies can't buy their own stock, and that takes a huge buyer out of the market.
And to see just how weak that factory data was, just look at this chart. The New York Manufacturing Index was supposed to show healthy growth, up at 4.3. Instead, the actual number came in at negative 8.7. That's not just a miss. That's a complete U-turn into contraction territory, and a really worrying sign for the economy.
And even the good news about that potential rate cut came with a pretty big warning label. JP Morgan pointed out that the cut might already be priced in. In other words, everyone already expects it to happen. They warned we could see a classic sell the news situation, where the market actually drops right after the good news is announced because the excitement is already over.
Okay, so with this giant macro tug of war playing out, let's zoom in a little and see which individual companies were making the biggest waves.
The star of the show, without a doubt, was AI. Alphabet smashed through the $3 trillion market cap after a new AI feature sent its app to #1. Western Digital jumped almost 5% because AI demand is so high they can charge more. And AI infrastructure company CoreWeave soared over 7% after landing a huge order from NVIDIA. Then you had Tesla, which got a nice 3.6% boost after CEO Elon Musk showed the ultimate confidence by buying another $1 billion of stock himself. And in a completely different world, Centrus Energy shot up almost 10% after news that the US government was buying more uranium.
Okay, let's zoom back out. A record high market, but with some serious red flags waving. So when we put all these pieces together, what does it actually mean?
A big question on everyone's mind is this just another tech bubble like the dot-com crash back in 2000? But analysts are pointing to a really key difference. See, today's AI rally is being driven by companies with massive profits, real earnings, and actual tangible plans to make money from AI. That is a world away from the year 2000, which was basically fueled by hype and speculation on companies that often had no profits at all. But here's the real twist in today's story. On the very same day that the stock market hit a record high because of all this optimism, the price of gold, which is the ultimate safe haven for nervous investors, also hit a brand new all-time high. This one fact tells you everything you need to know about the deep uncertainty that's just bubbling right below the surface.
So, going forward, there are two crucial things to keep your eye on. First, the Fed's decision. The market is basically banking on a rate cut. If we don't get it, or if the Fed sounds worried, watch out. Second, those US-China tech tensions. The big trade picture might be getting better, but the fight for dominance in technology, especially with computer chips, is still a major flashpoint that could erupt at any time.
And all of this leaves us with a critical question. Optimism clearly won today's battle, no doubt about it. But with these economic warning signs and geopolitical risks looming on the horizon, is this record-setting market standing on solid ground, or is it skating on dangerously thin ice? That's the billion-dollar question everyone is now waiting to answer. Thanks for tuning in.